Hey everyone, and welcome back. Now today I want to talk about Bitcoin and why we're seeing Bitcoin particularly, but even just a crypto overall, doing pretty well ever since we had that Federal Reserve meeting, which is really interesting because I think a lot of people were prepared for maybe a little bit of some negative outcomes, which I think is probably exactly why we didn't see that. More on that later. But what we're seeing here is a relatively positive response to the Fed's take on just Bitcoin and how it's placed in the market and some of their policies that they're going through and cutting interest rates, all that type of stuff. So we're going to discuss what kind of impacts that could have to the wider crypto market, what we should be looking out for, a lot of that type of stuff. Starting out though, let's take a look at the crypto bubbles just to kind of see how the market's reacting. We can see it is green on the day, but I would say overall mixed. We got about half the market down, about half the market up. Coincidentally, actually over the past 24 hours, Bitcoin is down ever so slightly, Solana as well. But then we are seeing Jasmy been running pretty big, which is nice to see. Ethereum is up, which is also good. But again, after that, we've got Arweave, Ohm, and Dex, Lido, MNT, some of these others. Things looking, like I said, we've got some really big gainers, and then everything else is kind of, a little bit up, a little bit down. So overall, a pretty average day on the market. We can see negative on the week still, so not a whole lot of positive news there. But I think we are seeing an overall better sentiment. If we do jump over to Bitcoin, we can see. The Fed meeting happened, I believe, somewhere around here, and then it's run up pretty nicely since then, kind of stabilized up here, and then kind of seeing a little bit of a pullback. Again, these are just hourly candles, so price is going to be fairly reflexive here. What we can see, RSI sitting about neutral. We've got Bitcoin not really doing anything too crazy. If we go back to the daily chart, we'll see a couple of different things going on here. We'll see frankly, just kind of a decent bit of bouncing around up between these three liquidity zones. That's kind of, basically we've just been ranging from like 109.5K on the high end to about 89K on the low end. So, pretty widespread there, of course, but as you can see, we're kind of just ranging, going back and forth. A price kind of not even really consolidating, I would say, but it is kind of leveling out here at this higher level after we did see that really nice move to the upside, early on in November. So that's kind of what we are seeing here. Moving on though, if you are interested in trading Bitcoin, Ethereum, Solana, whatever, anything like that, I do have that link in the description below to BTCC, 10% bonus on first time deposits, which is a really good deal. This is in addition to their extra bonuses of $10,055 per user. So, BTCC throwing a whole bunch of money at you to trade if you are interested, as well as no VPN or KYC necessary if that's something that you are interested in. Now, moving on, I want to discuss a little bit more about why we may have gotten what we could have perceived as relatively bad news from the Fed, because everybody in crypto basically parrots the same thing of we want rates cut, we want quantitative easing, we want to do all this, we want to do all that. Why did crypto go up when we saw no rates getting cut? So I want to talk a little bit about that. And starting out, I did want to take a quick look at what we're seeing here is essentially like the probabilities for what we're going to see the next interest rates being for the Fed. So currently we're at this 425 to 450. This is in basis points. A basis point is essentially 1/100th of a percentage. So this is essentially 4.25 to 4.5%. Essentially, they're saying there's an 84% chance that rates are not going to get cut in March, and there's about a 16% chance that they will. Now, if we go all the way out to December, so the end of 2025, this is effectively what we're looking at here. So there's an 11% chance that rates don't get cut at all. Again, this is not rock solid. This is just people's estimations based on what we're currently seeing and based on what the Fed is currently saying as well. So we can see about an 11% chance that rates don't get cut at all, about a 30% chance that we see one rate cut, about a 32% chance that we see two rate cuts, 18 to 3, 6 to 4, and then 1% chance that we do see 5 rate cuts, and I guess a 0.1% chance that we may even see 6. I think what we're seeing here, I would say probably fairly accurately depicts what they're trying to, or what the reality reflects. I believe the Fed has only indicated 0 to 1, so that would put us up in this range. It does look like the predictions or the people kind of estimating based on what the Fed is saying and the realities of the economy and all that type of stuff, that it does seem that 2 rate cuts is the most likely overall, but somewhere between 1 and 2 is kind of like the kind of a one standard deviation, or encompasses one standard deviation of probabilities. That's essentially what we're looking at right now. So I do think that is kind of interesting. Essentially what the Fed has said so far is that they just want to see how the current policies on the docket get implemented, what kind of impacts those have on the economy, and they'll react accordingly, whether that's raising interest rates, lowering interest rates. I'm not really sure right now. And what we can see is the Fed interest rates. We can see that obviously, interest rates were getting hiked. COVID hits, they go to 0, and then we all of a sudden, see interest rates go really high. And so, when we see the interest rates go high like this, that's because they're trying to kind of tamp down on that inflation. At this point in time, I think inflation, or the general consensus is that inflation has largely been stopped, at least from increasing. The Fed did mention today that inflation rates are still a little bit higher generally than what they might prefer, but not anything like super crazy. And so, we have seen that kind of start to come down because they feel like inflation is at least in an acceptable position, and then they'll be kind of going from there. So as we can see here from the chart, I have put a little bit of an indicator here of what one rate cut would look like. So that would, and this is also the end of 2025. Actually, no, end of 2025 is about right here. So basically we'd be staying flat or maybe even dropping about one little like tick or whatever they call this, and then that's where we'd be landing for the end of 2025, which is about right here. Now, if we look in the past, I will say we haven't seen many periods of relatively elevated interest rates that like after cutting has been started. If we look, I mean, there's a little bit going on here, maybe a little bit going on here. I guess we saw a little bit here as well, but this was kind of after like rates had already been cut pretty dramatically. So I'm a little bit skeptical to see how long these rates actually stay stable. I know that's the intention in the plan currently, but usually it just looks over time. Now, granted, this is all the way back to 2001, so we're looking at about 25 years of data here, but usually it looks like, way up, way down. Like when they start cutting, they cut hard, and when they start raising, they raise hard. So, I mean, it would be cool if they can kind of thread that needle and not do that this time. I am just a little bit skeptical given the over 20 years of data that we have here. It's not looking like that is a too common of an occurrence. So that's kind of what we're seeing here on the interest rates. We'll have to kind of track and see how that goes, but ultimately where this indicator is kind of where we're looking at ending up right now, and this is where we were kind of expected to be probably given 2, 3, 4 months ago. So now moving on, I want to take a look at one other item, in which is essentially like the Fed's balance sheet. So we can see obviously, quantitative easing, things went really, really high really quickly. Since then, we have seen a bunch of selling off going on. What we are seeing here is, again, this is the estimation that the Fed provides of when they'll stop quantitative easing. The end of the red box is when, and the indicator is the amount of Fed debt that they would have, of Fed assets on the balance sheet, I guess I should say, of like what they would have before they actually stop. So a little bit further to fall here, getting kind of divesting some of this stuff off of the Fed balance sheet, which overall I would say is a pretty good thing. Again, remains to be seen. Maybe they continue to sell off. Maybe they kind of taper it off a little bit above this. The main question I think remains is what happens after this, right? Because depending on what happens after this, I think kind of can change what happens in the crypto market. But I guess going back to the main topic of the video here is why are people viewing all of this happening as like a good thing? And I think the reason people are viewing this as a good thing is because it's more of a stable market. I think in a market where things are kind of going up or down is the preferred, but I think stable is better than anything. Because as we can see back in 2017 when we had that first crypto bull run, the Fed balance sheet wasn't doing anything positively or negatively. It was just kind of holding, right? And so, I think that's a pretty good thing to see here. Also, if we look at interest rates back in 2017, interest rates were actually rising. They were going up. And so this kind of, I think, shatters the narrative that we have to see interest rates going down for a bull market to hit. I mean, that's clearly not true based on 2017. Obviously, 2019 and 2020, when we saw that really crazy bull run, interest rates were in fact going down or staying level. So, there is a little bit of that, and I think that's kind of most of what we have in recent memory. But at least so far, or at least in 2017, we didn't see that. In 2014, we did not see that either. So, this whole notion that interest rates have to come down for crypto to go up is not totally fair, just because historically, other than the most recent one, that has not been the case, right? And so now I think the reason that crypto prices are going up, even though interest rates did not go down, is because I think people are just looking forward to a stronger economy. Because the other problem too is if interest rates cut too quick, then maybe that's a sign of a weak economy. And so I think what we're seeing right now is the Fed is kind of indicating to us that the economy is pretty well balanced overall. We're not having too much lagging inflation issues, but we're also not weakening the economy too quickly. And then obviously that's going to cause unemployment and general financial strife, things like that, which obviously is not good for risk on assets. So I think that's the reason that we are seeing crypto moving up, is because of all of these different things going on. Obviously, when we're dealing with macroeconomics and how the larger government and larger economic sphere kind of impacts crypto. It can get a little bit in the weeds, but I think kind of what we're seeing here is a pretty good sense of like the economy appears to be stable. The economy appears to be in a relatively strong position. And so because of that, there's really no need to do anything with interest rates. And I think that's realistically what we need to see is we need to see a predictable and certain economy, not an economy that is going, way high or way low. I think that's kind of where we're going to be seeing people most aggressive with their risk on assets is when they're not having to deal with the overall risk of the economy as well as a factor. So that's kind of what I'm thinking about how we're viewing things in the market, how things are kind of shaping up, at least for right now. So if you did find the information in this video useful, please do give me a like and a subscribe because it really, really does help me out. Also, I try to read and respond to every single comment, and a lot of you leave really, really good comments in the comment section. So if you want to leave a comment, just drop those in the comments below as well. Like I said, I do read and respond to all of them. So I'd love to hear what you guys are thinking about and what's on your mind regarding some of this stuff. And also if I covered this clearly enough. I know that this can be a little bit complicated. So if I need to dive into some more individual like concepts or notions, things like that, then we can definitely go on ahead and do that. But I also don't want to go like too basic as well. So I'm trying to kind of strike that balance there. And so, like I said, reach out, let me know, tell me how I did in doing that. So anyway, thank you guys for tuning in, and we'll see you in the next video.